They gon' love me for my ambition. Easy to dream a dream, though it's harder to live. They gon' love me for my ambition.
Ladies and gentlemen, we are happy to announce the opening of our new Telegram channel where we'll be sharing free setups, free analysis of pair, free signals, free entry, and free courses and lessons on the strategy. Join the channel on the description below. The link to the channel would be in the description below.
They gon' love me for my ambition. Easy to dream a dream, though it's harder to live. They gon' love me for my ambition.
Welcome to the top 6 pairs of the week. On the top 6 pairs, this is the 6 pairs we're gonna go through the week. And first on the top 6, we're gonna go through the DXY. The DXY is a pair that we use mostly for correlation with other pairs, mostly focusing on the dollar pairs, the pairs that has the dollar in it. So on the DXY, seeing it from here, will let me mark on the significance area. Means let's mark the significant high. You can see the blue ray line here represents the areas of value that have been marked. On a daily time frame, moving down, you could see from that first area of value, which is the nearest blue line, blue ray line there, you could see price did not touch. We have a gap to that area, and then here on the left is an inflection point and a gap to that inflection point. Then price goes to the upside, then comes back to test that inflection point, which signifies that we're going to finally fill up the gap to that blue ray line there at the top. So that's the move we'll be looking for. Mostly we're looking for a bullish move to the upside. So on the 4-hour, because it was not invincible on the daily what was going on, so on the 4-hour we break down the pair. As you can see, we have an impulse, clear impulse up to that area here, and we have this large correction. So let's see, okay, this is the impulse, then we had this correction, which is a continuation mostly for a bullish move to the upside. So but we have not yet confirmed our buying power because of where price has been situated. You can see price just take that low there, and we hit that low there to that area. And then what we're looking for is price. Let me remove that. So what we're looking for to achieve with this correction is to look for a bullish move to break above that ray line there. So you can see the DXY was very bullish. Now we're gonna go into our actual top 6. So on our actual top 6, first on the pair we have AUD Swiss, or AUD Swiss. So also this pair, I'm gonna break it down on how I analyze this pair. But first, let me remove the drawings there from that. Okay, looking at the DX, the AUD Swiss pair, you could see we had a wick to the left, and price came to fill up that wick there to the left. On the 4-hour time frame, we have a rejection. You can see this, the rejection wick to the downside, then we have a bullish impulse to the upside. This indicated the beginning of a buying pressure. On the 1-hour time frame, you can see we have a correction there that is set from the impulse area. So we're looking for that to complete the 2-touch there. As you can see, then we touch there, we retest there, and we create a structure which could definitely maybe come for a 3rd touch. Would be the highest probable entry there on the 3rd touch to go to the upside. So that's what we'll be waiting for on this pair. We'll be waiting for bullish move to the upside. So that bullish continuation to form as a 3-touch structure from filling that wick and coming back to retest that area again to the upside. So we'll be looking for an entry there, 10 pips. Stop loss would be enough. Looking at the risk reward ratio, the risk reward ratio is uncapped to the upside. You see, there's no area that we could say price is most likely to reverse from or create a deeper pullback from. So from that area, it shows that the move is to the upside. So the second pair that we have on our top six is the Euro Swiss. As you can see, the Swiss pairs are looking good for this week. The Swiss pairs are looking good for this week. On the Aussie Swiss, we were looking for buys, but on this one, let me just remove all the drawings so you can see we had a low that we broke to the left. That's a weekly low, which means it's an area of value. We broke that area and we created a new low there. And now what are we looking for price to do? So we're looking for price to come and commit to that high over there, which is our area of value. So that's the high we're looking to take to the upside. So that's the move we're looking for to the upside to come to that area of value there at the blue ray line. So we have to look at what price is currently doing on the daily time frame, which is much more easier to see. Looking at it on the left, where has price reversed on an area of interest, which is inflection point, the daily inflection point there to the left. See price reversed at that area. Take that area and then it moved to the downside. But what happened to the downside is you can see there's a week there. There's a week that price came to fill, which is now our area, which we're now gonna name as our area of interest. So that week there that has been filled is our area of interest, and price have hit that area, broke below, and now it has moved to the upside. So, but as you can see, looking at price right now, price didn't go to the upside, but instead price is now moving back to the downside, most likely to the low. So price is most likely moving to this low instead of going to the upside, but that's the move we're looking for. So price could be coming for another touch to complete that as a double bottom. So you can see price is reversed here on the 4-hour inflection point. Let me name that area the 4-hour inflection. So that's the 4-hour inflection. This is where prices reversed to move to the downside. So remember, on the high time frame we were looking for buys, right? So let me just make sure that this is not invincible. It's not visible on lower time frame because they get a bit messier. So as you can see right now, what we're looking at is that price is going to the downside, probably to fill up that low. But as you can see on the 1-hour time frame, price is looking very bullish. A 1-hour time frame, you can see we have a inflection point above, set above that bullish price area. So this is where price is most likely to take that area before it goes to the downside to fill up that low that we've been looking to fill. So let's mark this as our area of volume. So this is going to be, let's mark it the 1-hour liquidity point. So this is the point of liquidity from the 1 hour. This is where price is tagged and it's moving to the upside. So now we're looking to watch if price is gonna break that area above. So as you can see, the way price has been moving, let me bring that out, and then price, the way price has been moving, left the low there. So what we're looking for is to continue the move to the upside to take that area above that I've marked with that white ray line. So price will be moving back to retest that area and form a continuation pattern. And we'll be looking for a risk entry within there. I think 10 pips stop loss would be enough. Looking at that previous high, price is well above that previous high, which means we're all off clear for the structure. So the entry there, I think, to put on a 10 pips stop loss would be enough. It's more, way more than enough. So there is way more than enough. You could see price. So that area above, it's 3%. We could say it's 3% to that area set above price. You could see that's the 15 minutes inflection point. So price is most likely to reverse or break that area. But looking at the way the momentum and where price have reversed, price could break above that area and continue to the upside. So on the third pair that we have on the top six, we have the pound AUD. So the pound AUD, it's very complex in a sense that it has moved in a structural form to the upside. You can see from looking at price at that way, we have three touches there, which is a steep flag on the higher time frame. Let me change the color. Perfect. So this is showing a steep flag that retest what an area there, which is a daily, will be more visible on the daily. That area that we have tagged there, which is price looks to be reversing from, you can see from that daily, that's a daily liquidity point. So prices take that area, but price doesn't reject it clearly. So we don't see clearly what's going on with price. Let's go through 4 hour. We have candlestick follow through. You can see we have two candlestick rejection at the top, and price is done a 1 hour follow through to the downside. You can see that very clear. So now that we have a high set above, so you can see this is a bearish move on the 1 hour, and also the 4 hour shows candlestick follow through. So on the 15 minutes where we look for entries, is that we have that as our 15 minutes liquidity point there, which is more where price is most likely to take above that area, which is below that previous inflection. And now looking at price may continue its move, going to the upside, and then break above, and then pull back in, and then we'll be looking for confirmation entry as a continuation flag to take that move to the downside. So what we're basically looking for is price to take that liquidity point on the 15 minutes time frame. As always, our stop loss goes as low as 10 pips. So we'll be looking for risk entry within the flag. Even a reduced risk entry is okay, but our risk reward is looking very decent to the low. Just to play the range only, it's looking very decent. Okay, that's what we're looking for. But on the daily, you could see nothing is yet confirmed on the daily. I mean, the candlestick rejected, but it's a bullish candlestick. Only on the 4 hour, you could see, okay, now we on the follow through. You could see that, okay, we have it now. Let me remove this and make it visible on only in the 15 minutes because it's getting messier here. Let me. Only on the 4 hour and the 1 hour can you see visibly that, okay, there is a move to the downside. But the way the candlestick have been moving, the bullish candlestick, if price breaks above, then we have to change our bias and look for a bullish move to the upside. So we need a confirmation entry in a form of a continuation entry at that area there. We could go 10 pips or 11 pips, somewhere between, because that's as low as we go, but the risk reward to the upside is looking very amazing. So if price do break above, since the way price has been moving, you can see the candlestick has been very bullish on the 1 hour. That could be the bullish move to the upside. And given that on the daily we don't have a candlestick confirmation yet for a sell, so yeah, Euro USD. Euro USD. Okay, this one looks complicated. Let me remove that and make things clear. So how you can see it's moving in a range. So we're trapped within this range of price and mark the highest high of the range. That's the high of the range, and we here we have a low. This is a low. So you can see price is moving in a range in a form where the high came from taking that previous inflection point to the left. That's where price reversed to the downside, and then on the downside price hit that area there. Also you can see that's where price started moving to the upside, but you can see price is moving with no progression on the higher time frame. It's just forming a squeeze. You can see that's just a larger correction. It's just the range to move to the upside. That's what we'll be looking for on overall move direction. So on the daily time frame, let's move in and tackle the range. So this is the high of that range, and this is the low of that range. So what are we looking for here? We're looking for a take at that inflection point area there. You see price take that inflection point area to the left on the daily time frame from that day, and even on the high, same thing. Price has done the same thing. So now price is moving still in a range. So how do we analyze that? Looking at that, we could have that as our area of interest. Let me mark it. Let me change the color, because you can see that's our area of interest, but here we have a volume set above that area of interest. So we're gonna, let me mark the red line there above to incorporate everything. That's the area of liquidity that price may be looking to take in above that area. So you understand, price is touched that area, which seem to be a 4-hour inflection there. You can see where price is reversed on a 4-hour time frame. That's all will be clear. On a 4-hour time frame, you could see there's an impulse move down, then a sharp move to the upside. That's where prices tagged. You can see prices take that area. Overlooking at the overall structure, that is a steep flag. Okay, let me change the color of that trend line. Boom. So that is a steep flag to the upside. And that's that area where prices tagged. So looking at that, we could say we have a bearish move overall on the higher time frame. Even on the lower time frame, it's very clear that the move is very bearish to the downside. So that's the first area where we're looking at if price, how price is going to react to that area. After price is moving impulse with the correction, then we have impulse, then a correction, then we're looking for that impulse to that area with a possible reversal at that area, or even a breakthrough. So we still have to see how price react to that, but now we here in a correction. So let's clear things here. See, this correction here is below this 1-hour inflection point. That's the 1-hour inflection. That's our 1-hour inflection. And then this correction here, it's forming slightly below that area and also below that low. You see this correction is very steep to the upside. So price is moving correctively to the upside, but very steep. In that method that we have a, you could see prices touching there. We could be looking to form a 3-touch steep flag to the upside. So this means we'll be patiently waiting for price to make a retest of the previous low. And as you can see within the structure of price, 15 minutes would be very clear. You can see within the structure of price there on the 15 minutes area, price takes that area, moves to the upside. Let's see, that's what we'll be looking for, price to make a third touch. Since price is not yet formed a base where we can draw our trend line to the low, so we just estimate price might form a middle section there and then form a move to the upside to come for that touch at that area. This is where we could get our risk entry with price. So let me just the trend line there. Price could move like that, but price doesn't have to like 100% with perfection touch that trend line, which is looking for it to break that line there and then retrace. We'll be looking for an entry around there. We could go as low as 10 pips. Yep, 10 pips, that's perfect. Look at that. And then the stop loss put is above all that trend line and also the ray line, so which means there's enough stop loss to protect us from getting taken out. Now look at this stiff flag, and then we're looking for that as a move playing the range to the low of this pattern. It's 4%, 4.3%, and then to this area, first area of interest, it's 6.8%. Look at just this move alone is enough to bank you 6%. So moving on the fifth pair on our top six, we have the USD CAD. So there's USD CAD, you can see is a dollar related pair, which means we can correlate it with the DXY. And but on the DXY, we were looking for a move to the upside, which means here we'll be looking for a move to the downside. So this pair, it's correlated with the dollar pair, so we'll be looking for that move to that area, and then we'll be looking for a sell. So this is a DXY correlated pair. You can see we have a high there, which is the highest high of this area. See our recent high take that area there. That's where price reversed previously, and now we're looking to tap into that area, or we could have price just reverse from that point. That's the question. We'll wait for price to give us an answer. So you can see we're at that high forming of that correction there. You could see the move is very bullish, which is an impulse move for a continuation to the upside. So on the 4-hour time frame, price, okay, it's not very clear what price is doing, because even here you could see we have a mini double top, which is where price could actually reverse. Looking at the DXY, looking for bullish move immediately on the DXY means we could just reverse from this area and move to the downside, right? But since we had those big bullish candles to the upside, we need confirmation before we can take sales. So confirmation will be to break this area and impulse down, and we have that as a continuation to the downside, and price could just hit that low and move to the upside to take that area above, which is our area of value. So price is most likely to hit that area of value, but we could capitalize on a move to the downside. Reason being the DXY. Why would we take a move to the downside? It's because of the way the DXY has been set up. So price could break there since the DXY has a lot of room to the upside. So this on this pair I was only focusing on the DXY correlation. If the possibility and the probability of the movements of the DXY could change significantly the move of this pair. So this is if price break bullishly and give us a continuation, we will take that move regardless of the DXY, since on the daily time frame we have so many bullish candles to the upside. So this is the last pair on our top 6, and as you can see guys here, what we have, let's go to the weekly. It's also a dollar correlated pair. It's a USDCs. We have price here. We had a high area of value that has formed to the upside and to the downside, that has broke lows and highs and then moved up. So the move here is that price did move to the upside there, but you can see there's a tiny gap to that area of value there. So which means price could just move above to form that, and then that could be a squeeze to the upside. So that's what we're looking at from the daily time frame, because like I said, here we have a, let me draw that. Here we have a gap to that area of value, which means price could come back most likely to fill up that gap. Price could move like that and then go to the upside, try and fill up that gap. So, and also since we're looking at the DXY's correlation, means if the DXY moves up, we might also move to the downside here on this USDCs. So we are open for that. But now looking at the structure of the USDCs, you can tell that prices broke the low of a double bottom and then impulsed up above that previous high. Now we're retesting that previous high. So what I'm looking for is a second touch on that previous high for an entry to the upside. You can see with that inflection point there, 1 hour inflection point set above. Let me name that okay, 1 hour inflection. That could be an area where we manage price aggressively. So on the 15 minutes, let's go for clarity. So 15 minutes for clarity. As you can see on the 15 minutes, price is currently sitting above the previous high, and on the left we have a 15 minutes liquidity. Let me mark it 15 minutes liquidity to the left. That's where this continuation structure, it's set at this 15 minutes liquidity, and what we're looking for is a move to the upside. Now the catch here is what happens if price breaks below that structure and we have a continuation, is that we flip our bias also on this pair, because we have looked at the DXY for correlation, because since the DXY is looking very bullish, means all the dollar correlated pair means the dollar will be very strong, right? So also here, but by looking at that, you can see we have so much room to the downside. Thank you for watching our top 6. Until next time, shout out.